Hey guys, Joel Frank here, market analyst for YouTrading, and today we're taking a look at the front month futures contract for WTI, or basically just WTI. That's the American benchmark for sweet light crude oil. Let's take a look at the chart here and we'll talk through it. A lot has been going on recently with WTI. As you can see, since this is back in the early part of the month, we nearly hit the 68 level, but there's since been quite a sharp pullback all the way from 68 to lows all the way down here last week of under 58 or in the low 57s. Okay, so quite a sharp pullback recently. The main reason for that pullback is really the fact that during that time Europe has gone back into lockdown, really, or most European countries have significantly tightened their lockdown restrictions to stop the spread of coronavirus. And obviously, all these restrictions are not good for crude oil demand. And as a result, we've seen a lot of analysts and OPEC and a lot of other crude oil agencies downgrading their oil demand growth expectations for 2021. So that was that hit. But as you can see, in the last sort of 2 weeks, really, we've stabilized. It's been a bit of a roller coaster, but we've stabilized. We found support down here in this low 57 hundreds area. That was also support, as you can see, back in February. It was support again last week. But we've been capped really by the 62 level. Okay, and now you can see we're consolidating just above 60. Just above 60. And to the downside, just another two levels that we should keep an eye on. We've got the 50-day moving average, which one of these days back here, you can see on the 18th of May, that was a really good area of support. And it appears as though the 21-day moving average is showing up to be quite a good level of resistance as well. So just something to keep an eye on there. But yeah, guys, looking ahead, crude oil, you know, it's volatile. It's probably going to break out of these ranges. So what's driving crude oil at the moment, fundamentally speaking? Well, quite a few things this week. Obviously, the pandemic's always important. There are some concerns about rising cases in the US. You know, Biden, the White House, and other health officials are now trying to encourage states to pause their reopening efforts. If cases continue to rise and we do see the states go back into lockdown, crude oil is going to hate that. It's going to absolutely hate it because obviously America is, I think, after China, the biggest consumer of crude oil in the whole world. But aside from that, we've got quite a lot of other stuff as well. We've got the OPEC Plus meeting, which is going to be important. Markets expect OPEC Plus to agree on an extension of the current oil output cut agreement until at least the end of June, and the Saudis are expected to roll over their voluntary cuts as well. So that should be crude oil markets supportive, although OPEC Plus delegates have been sounding a little bit more pessimistic on the outlook for crude oil as of late, which potentially isn't so great. And then we've got, this is tonight on Wednesday, we've got President Biden. I think he's announcing this at just after 4 p.m. Eastern time. He's going to be giving the details of his infrastructure stimulus spending. So markets could be reacting to that, including crude oil markets. And then we got some key US data this week as well. We've got ISM manufacturing PMI for the month of March on Thursday. And then we got the jobs report, the March jobs report on Friday. Although Friday's a weird day because it's Good Friday, which means, you know, US markets, European markets are going to be closed. Volume's going to be very, very thin. So yeah, watch out on Friday, guys, because the reaction to the jobs data could be pretty choppy in all asset classes. But yeah, definitely in crude oil. So we could definitely see a break. Perhaps to the north or perhaps to the south of these levels, depending on how well all of these events go for crude oil. But yeah, guys, anyway, that's my video on crude oil. Hope you enjoyed it, and I'll see you all in the next one.